Good morning and welcome back to another pipeline trading video. Today I'm just going to cover what I'm seeing in the overall markets because things look they want to keep going up. And we've been getting more positive news. It's pretty interesting how this is where I would argue, and I'm not the only one to make this argument, but trading is harder than physics. Physics, you have the laws of physics that don't change. In trading, you're looking at it. Things could show that we're supposed to get a pullback before going up, and it does the complete opposite. And right now, we're at a pivotal point. For me, again, I haven't changed my thesis much. Yeah, there's some opportunities that I probably missed out on, but that's part of the game. And we're seeing a continuation. We have not seen a pullback into the levels that I was talking about, because typically when you have a character change with a breakout pattern, you want to see it retest, hold this area of support, and then make its next leg up. This is not doing that. This is just saying bye-bye, and we're off to the races. Now we're getting to a level, though, where if you see on the Bollinger Bands, we should be getting a pullback. I don't know how big it's going to be, especially in this market, but things to me are getting really overextended, and a lot of it has to do with oil dropping. So the first thing today, what I'm going to do, I'm talking a bit about the overall markets. I'm going to go into oil, gold, Bitcoin, ETH, Tesla, and Intel, because Intel I'm actually going to be shorting. I have a short on that I put yesterday on an options play that I'm going to cover. And again, this isn't financial advice. So whatever your game plan is, your strategy, your comfort zone, do what you think is best. This is just to give you another perspective of what I'm seeing. And if it matches your thesis, great. If it doesn't, then it may give you more conviction, or it may make you question a few things that you're looking at. If you're swing trading, if you're an investor, this is going to be different because I'm not going into fundamentals. I do think about it when the market gets hit in fair valuation, which I'm going to talk a bit about the fundamentals with Intel and why I'm looking to short that the way I am. So first thing I want to cover is the semiconductor ETF. Now, if you remember when I was going over this number, I think was at about 91, the percentage from the 200-day moving average that it's gone up. And you could see here it was 86% from the 200-day moving average, 94%. And I get the whole AI and they're putting in future earnings, and that's great. And I'm going to go through that with Intel on why some of this stuff to me is a little overinflated. The buggy's before the horse. Okay. This is really, really overbought. I'm not the only one that thinks that, because the greed and fear index, we're at green. We're at 76. This is when it turns green. It's everything, all three indicators, and these are lagging. So that's why things can continue to go up, right? These are lagging indicators. You want to look at price action, but this is all showing overbought. So it's only a matter of time before something happens, or someone's earnings aren't good, or someone changes their uh, forecast or readjust something. Anything can happen like that where we're going to see a pullback. Now, if we go to oil, I did say that oil could spike, and I thought that if the news, and it's interesting because nothing's changed in Iran. And OPEC, they had a big issue, right? The UAE left. And overall, I think that is bullish for prices to come down, because if they start producing a lot, it's gonna drive prices down, because obviously the more supply you have, then it's the supply and demand play, right? That's very simple to understand. If they're producing a lot more and there's an excess of oil, you're going to have prices come down, right? Right now, the demand's higher than the supply, and that's why this whole thing happened. So the pattern that I had from the last video was showing that we could form a head and shoulders, because in order for my number, which was, I was saying, anywhere from 120 to 130, you'd have to make a new high, and we haven't done that. So this is looking more bearish now than before. Doesn't mean we can't get another spike. Anything can happen, right? So it just looks like, based off of what's going on, if they open it and they say things are good, prices are going to drop a lot, and it's going to go below 100. It'll probably go to 84 to 75. And this chart shows that it could go a lot lower into the 60s. But I'm saying that's where the first stop would be. If we break the 50-day moving average at 91.34, the next stop is the 200-day, which is 75. And this is showing that it could go down because this is where there's a lot of liquidity. And you're looking at oil prices below 65 a barrel, right? So that's actually good, because, and this would then change my thesis with the market, because if this were to happen, the market's going to continue to go higher. But at the same time, the market may already be pricing this in. There's a lot of optimism of what's going on in Iran and the threats, and there's going to be peace talks and all this stuff. So we could actually already have the market pricing this move in. If I go to gold, gold is very interesting, because the way it was looking, I was expecting gold to go around 4,000 or lower, and it's been holding up pretty good. This is also a little concerning, because if oil goes up, if gold goes up and spikes really big, typically those are warning signs, right? Something, if people are flocking to safety, why are they flocking to safety, right? Now, this descending wedge is bullish. You can see we're holding these key fib levels, and we got a really good candle. And now we're going to see if we get over the 50 and everything crosses, then this is our next stop, back over 5,000. And by the way, this all depends on where we break from the channel. If we break it here, then this shows gold going to 56. If we continue to chop down and we break here, right? Because that could happen. We could come all the way down here, find one of these fib levels, find support at the 200-day, which we did here. So it doesn't mean it can't happen again. We could get a secondary test down with support. But all the indicators and this formation is bullish. So gold is no longer looking like it wants to come down, and it might, but if it breaks out of this descending wedge, this is going to go a lot higher. Now on Bitcoin, if you remember, there was a video I did, it was maybe over a month ago. You could go check it out. This is a bear flag. And what was interesting is, and I talked about this all in the video, this is truly a Wyckoff phase chart. This right up here and here was distribution to the downside. So what I was saying was, if we break the 50, the next stop is the 200-day moving average, okay? Typically, we could even shoot higher to 84, because you could go to the middle of this distribution phase before making its next leg down. That's why in one of the last video I said, for me to turn bullish, what I would like to see, not what I'd like to see, what I'd have to see is that we break above 98, find support at the 200-day, and then go. I wouldn't chase this up because we're still in a bear flag. And it's interesting because we're in a bear flag, but we broke out of this um, downtrend. Like this is a pivot, 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 right? Three of them. So this pattern down, when we go up, we should actually be, and it's holding. You can see right here. Let me zoom this in a bit. We broke out of the channel, and I'm not talking about this channel. I'm talking about this line right here that's connecting the lower highs. Okay. We broke out of it and we held it as support right here at 75,000. And we're holding the 20-day moving average. This is all very bullish. My problem is we are in a bear flag. And this bear flag could continue to go up and up and up. It could go all the way to 93,000. There's no limit to where the bear flag could go if that's what the market wants to do. We haven't had an impulsive move for me to think, okay, if this were to really spike up, come down, then and hold, I would be like, okay, we're now in a bull market with Bitcoin. And this could go make its all-time new highs, or test the other highs, or even shoot past it to go to what a lot of people were saying, which was 150 or 137, or even 200, whatever it may be. We don't know until you start to watch it closely and put your fib extensions out. So right now we're at the 200-day. And what you'd want to see if this were to be bullish is to break the 200-day somehow. And I don't know if that's going to happen because there's a lot of liquidity with short interest, and it might take out all the short liquidations that are leverage. I believe it's over 1.2 billion, and then come all the way back down. And another thing too is the higher that this form goes, this formation, the deeper the correction is going to be if it breaks it. So keep that in mind. It would almost have been better if we were to have done it over here, because we would have had a shallower pullback. The bigger that this continues to go, and if it ever does break out and it doesn't negate the bear flag, the plummet will be a lot deeper, probably deeper than the 50K. So don't jump into any conclusions yet, because we are still in a bear flag. And look how many times we made, okay, a higher high. Okay, this is it. First it was, this is it. Oh, this is a cup and handle, right? Just to give you an example, right? This is a cup and handle. Here's the cup, here's the handle. I'm just doing this fast for you. So if you were to do that here, because it's the same thing, look at where we go. This is exactly what happened in this bear flag. So that's one thing. This is why I love understanding that it's never just one thing. You have to be, and it doesn't mean you can't be bullish. You just can't be 100% bullish, because if you were to be jumping in here now and going long and putting a big chunk of your portfolio without hedging or doing anything, this level is huge at the 84,000, 85, because this is a level we broke to go to the downside. So typically what you would see is a massive pullback, and you would see it go back up to where it broke. No differently than if you saw it break here to the upside. It's like what I was showing on, I believe it was the market, the overall market. you'd want to see on the S&P or the QQQs, yeah, it broke above. It usually would retrace, find its support from the level it broke, and then make its next leg up higher. Well, this is the opposite. This, you're going to see it go back up. We need to break this level and hold it as support for us to say that there's a trend change, because this could just be a fake out, right? So it is bullish, but unless we break out and hold this level as support, so this is the ceiling. We need the ceiling to now be the floor before we make our next leg up higher. And you can see there's a lot of fair value gaps, and there's a good argument for why it could go. And it doesn't mean it has to make it all a new high, because we are in a bear market. This is a bear market move with Bitcoin. But it doesn't mean you can't have 20, 30, 40% rallies in a bear market. That's where a lot of people are mistaken. Some of the biggest swings are in bear markets to the up and downside. So we could see a level of 114 if this breaks above, and that is it. We don't go make an all-time new high. And we saw that in 2021. Everybody thought it's going to shoot past 68, and it didn't. It was a double top. So just be mindful of that when you're doing it. You could play these ranges, but just have that in the back of your head with your risk management and whatever it is that you're going to do to hedge in case it goes against you, because that's the biggest thing. So right now, just to summarize, we should see this potentially break the 200-day moving average, touch 84, 85K before coming back down. And if we did actually shoot all the way up here, you'd want to see it hold support at 85. And then I would argue we're going into the hundreds, right? Now, if we go to ETH isn't there yet. But what's interesting is if you look at the channel, the 200-day moving average is up the top of the channel. So we could see ETH go to 2600. And right now we're looking like we're trying to get through this order block, and it's holding up pretty strong. But we've had 1, 2, 3, 4, 5, 6, 7 consecutive green days, and we're not really seeing the volume take off. Like here, when we had this move up here, look at the volume spike. So you know buyers are there. This is where people have to be careful, because this can turn. Or at the same time, I think it might not be now, because it could be lagging Bitcoin. So as one goes up and makes its move, then there's a rotation into ETH. That's something else to be mindful. BMNR, same thing. And this is what I mean, where it could be really boring, where people flip-flop on their thesis. And I've done that before in the past, and that's why I'm very cautious before I jump to one conclusion where I'm giving every scenario out loud. BM&R looks like if it were to break above here, because it is bullish, the fair value gap at 26.19. But when I look at the options chain, one of the things that I'm seeing is we are way heavier on the call side than the put side, meaning that there's a really good probability that ETH and BMNR, because sometimes BMNR front runs ETH, that I expect BMNR to close below $23 by Friday. And that's just me looking at the options chain. We're way heavier on, and remember, when I say way heavier, what typically would happen is there would be a balance by Friday of the institutions and anybody who's hedging their positions, and then they would close it out Friday. So max pain would be as where do the market makers put the price on by Friday, where the most calls expire worthless and the most puts expire worthless. And you have to tally that up and then find a spot where the majority of them on the put side and call side would expire worthless, so they don't get paid out. That's what I'm referring to. So I expect this to close below $23 by Friday. Now, Tesla's also looking bullish. We could get a spike up to 442 area. Again, it's holding the Fibonacci. We did get a good pullback over here, and might not. It might. Excuse me. We got our impulsive wave. We have our retracement, and now this has to make a new high. If we can't get through this order block, it's not going to happen. But this descending wedge is actually bullish. So when we do break out, which we just did, and we stay above it, this would be the area of its measured move. Doesn't mean it can't go even higher, but that's what we're looking at, is this order block. And then it could make its next leg down. We go to Meta. Meta's actually holding up too. Again, it's descending, so that's bullish. It just it all depends on, are we going to get, because this is an impulsive move up, are we going to get a pullback to this area? These are all the key fib levels, and it could be this could be wave 1, wave 2, somewhere around here, and then go make its wave 3, and then 4, and then 5. But I obviously think that Meta is going to be a good play. Right now, they're going through a lot of stuff. But with how much is going on in the AI space, I don't see how these guys aren't going to be a winner either. That doesn't make any sense. And we've seen this before where they get clobbered. And then next thing you know, like, look, we went from, what was it, 764 down to 483, and then back up to 797. So this is a good retracement, and it's getting into some key levels. You see how we broke down and we're supposed to come back up here and then make its next leg down. It didn't. So those are things that we have to see now. Does it hold this level as support? Because this was the ceiling. We broke above the ceiling. We want to see it hold as the floor before making its next move up. Intel, this is the one I was talking that I'm short. This is a bullish flag. It's now made its measure move. And the reason why I'm short Intel, and it doesn't mean that I can't be wrong and it could keep going, because I'm actually going against the trend, which is a no-no. So I'll be the first to admit that what I'm doing is not something that you should do, because really the play would be, if you wanted to be an Intel, which I absolutely do not at these levels, you would want to see this pull back to 110, right? Which it is now. But this morning it was at plus 4%. I think it was opening at 112 area. And what you'd want to see is it hold 110 as support, and then it could potentially go up higher. How high? I don't know. So to go back to why I said fundamentally, now I'm going to talk about why I'm shorting this fundamentally. If I look at the chart, this could keep ripping up higher, right? Everything is pointing to the upside. We have another gap up. We had a bullish flag. So this could go to 120 for all I know. But I'm trading it really tight. And two things I'm just going to pull up for myself to make reference to, because this is a big deal. Number one, Intel is more valuable than Oracle. I don't know how that makes sense right now. That means that they are pricing in something huge already. And my point is, it could be the Apple news. It could be whatever else is coming, but they're pricing it in as if it already happened. And I have the experience in the investment world to know that this is buy the rumor, sell the news. So again, I go back to, they reported 13.58 billion in revenue. Okay, remember that, 13.5. We'll just keep it simple. Here was 13.67. We go here, 15.41. So yeah, they can argue that their earnings are a lot greater because that's what they're saying. Their earnings blew it out of the water. Okay, fine, great. They reported 0.29. Earnings were great. They reported 0.59. So explain to me how, from even over here, look at this, they reported 1.39. So how did the market put a valuation at $70 in 2021 and they were reporting, I don't know, what is that? 3, 6, not 4 times their earnings at this level. They were bringing in 18.5 billion in revenue, and you're giving them a price even higher than that? So yeah, for me, this is a short all day long. I don't know when it's going to fall down. And to me, it already made its measure move. This is descending, right? And all I'm doing is I'm drawing a line from open to open and we're broke above, right? So I'm even giving it a benefit of the doubt and say on the high end. And that would have put us at about 83, 82. So that is why I'm short Intel. And I could be wrong. And if it continues to run, I'll have to either add or cover my short. And the other reason why I am short Intel is because there is a massive, so in 2 days expiration, Intel has a open interest of over 16,561 at $100 strike. So for me, that means that I expect, remember I was saying max pain? I expect Intel to close below 100 by Friday. That's my play. And it doesn't mean that it has to happen, guys, because there is a lot of, well, I mean, look, there's even a 15,900 calls at the 120 strike. That's an 18% delta or a 0.8, a 1.8. And the 110, which is interesting, the 110 strike that I'm using as reference has a 0.45. So even the options chain is putting this at a 45% chance that it closes above 110 by Friday. I would never like those odds. And on top of everything else, let's say I'm wrong and it keeps going. Look at the greed. This is an extreme greed. I'll take I'll take this probability all day long because this is huge in my favor to be short. Anybody buying at these levels, I just don't see it. I don't know what you're pricing the company higher than what it was when they had greater earnings. And I know what you're going to say out there. Well, look at the future of AI. Look at this, look at that. Yeah, but it hasn't happened yet. So then are you telling me when all this great news happens, the stock's going to go down because it could overshoot it and they're already pricing in something that may not even happen? What if something happens geopolitically? What if, I don't know, Intel's CEO leaves? How about that? What if something happens internally within the company management? They have a big war going on that nobody knows about because you're not going to know about it because they're not going to disclose it till they have to. No one knows internally if there is something that could potentially happen as a risk that nobody knows about. And then when that news comes out, let's see where Intel is, right? So for me, they're pricing in something that is too big. It's too big. There's too much hype. And when there's too much hype around it, and it doesn't mean that I don't believe in Intel. I think Intel does great chips. They were the biggest, the best in the business at one point, and they fell by the wayside with competition. So then the other argument is you think there's not going to be more competition coming out in this world that we live in with AI? I think there will. You don't think AMD and NVIDIA and all the other chipset makers out there and semiconductors aren't going to be doing things to compete? So those days of having one winner, I think, are behind us. I think there's going to be multiple. But for them to be pricing in this growth, I'll give you an analogy. If I said, hey, my business is for sale and I want $10 million, and you're looking at my revenue, and the revenue shows that it's going to take you on my PE ratio 20 years to break even before you're in profit based off of what you paid on my valuation. Would you do it? Probably not. Because you're looking saying, I'm going to have to work and do this, and it's going to take me 10 years, at least 5, 10 years, just to make back what I have. That's how you have to look at the PE ratio. If something says, oh, it's trading 25, 30 times, 40 times our earnings, that's essentially saying it's going to take you 40 years to break even. So keep that in the back of your mind. And that's why you have the big tech ones that are 10, 15, 20, but they have a boatload of cash. So you know they're always going to be the leaders. This is running because of its capital injection and Trump supporting them. And that's it. If you look, I just showed you the numbers. Look at their revenue, look at their earnings, and compare it to the previous high. Like in 21, you're talking, yeah, it doesn't even make sense how they got to this level based off of their numbers. And that right there makes me suspicious. Institutions are pumping this and they're going to be distributing up here while everybody's buying in because they need the liquidity from retail. And that's how the game's played. So I hope you found this video helpful. I hope I gave you a different perspective on what's going on. And as you can see, this is live right now. I'm looking at the 5 minute and I'm going to do it so that you can see exactly what I was looking for. And it looks like we're holding one tennis support. We got that measured move on this bear flag, on this bull flag, and now we're selling off. So we're going to see, does it hold the one tennis support and make another leg up, or does it sell off? Because right now, it just sold off aggressively. And look at this candle. That is a lot. So remember what I was saying, bearish, you would see price fall and volume rise. Price rally, volume falls. So we saw that over here before I end this video. We saw that here. Price rallied, volume rallied. And guess what it did? It chopped and the volume went nowhere. And this is why you have to be careful to go 100% off of these technicals because things can change. The institutions do know about it. They're looking at levels and whatever their play is that they're going to be doing. So now you're seeing the buying come back in. So this looks like it might actually run up to where it was, $1.12. Based off of this, look at this one candle. Look at that. Aggressive sell. Where did it go? It went down below 110, but it held. So that is really bullish. But at the same time, so now this changed to green. So they had a massive amount of people sell off, fake everybody out, and then now that's probably going to go to 114. And no, I'm not covering my short yet. I'll probably be adding into it because this is the valuation and everything else behind it doesn't make any sense to me. But if you found this video helpful, please support the channel, like, subscribe, comment, hit the bell notification so you can stay connected. As always, stay disciplined, trade with intention, and God bless you all.